Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Tim Bonacci. He's the CEO of Luma Financial Technologies. We're going to talk about Fintech platform for structured products and how financial advisors can make use of them. It's great to have you with us at Market Site. Thanks so much for joining me.
Great to be here. Thanks.
Structured products, you're starting to see them being used in portfolios more and more.
Absolutely. I think the use of structured products in managed portfolios is one of the fastest growing segments in the market. And I think it makes perfect sense if you look at, one, the demographics of the market, how they're aging, and also the current market. A lot of volatility recently. Interest rates remain to be very low. So you're seeing advisors use them to put them into a managed portfolio and be an active part of that client's position.
And I would imagine that Fintech is making it easier for advisors and really transforming, as you had said before, the way the structured product industry works.
Absolutely. I think that's one of the biggest sea changes in the industry. I think we almost, at least in the United States, reached almost capacity in the market because while it can be a very good product for end investors, providing some level of risk protection but still exposure to various markets, the one challenge is it can be a little more manual to use. It just screams technology. So the technology makes it much more easy for advisors to build, construct, and design products for their clients' portfolios and then manage them while they're in the portfolio, as well as adding a lot of transparency, which is always good in a financial market.
Right. Now, let's learn more about Luma Fintech. What are some of the key features? What's the framework? How are you helping advisors create these structured products?
It really is designed to help advisor all the way through the process as they're managing clients' portfolio. From initial education and testing on the product and how they work, because they can be tied to pretty much any type of asset class, market environment, whether that be equity or commodities, et cetera. So there's education modules pieces to it. There's also a very robust function to be able to design a product. As we know, not all clients are created equal. Their portfolios are not the same. So be able to design a structure that actually matches a given client's risk tolerance, where their needed exposure is, timeline, et cetera. That's a very good component to really look across the industry and design it and create that for them. Next, the next component is training. You can create it. The next component is actually to trade the product into the client's portfolio, which pushes right into the client's clearing firm. And then lastly, and almost most importantly, this may be a 3-year product, a 4-year product. How are you getting information and managing it along the life cycle of that product? So Luma, what it really does is automate the entire life cycle from the very early parts to the very ending parts of a product when it's maturing and all the different corporate actions that may be going on with some of the investments there.
What sets Luma Fintech apart from your competitors?
We always have been and always will be an extremely objective platform. We're a buy-side focused platform. There are 1 or 2 platforms out there that are a little bit more sell-side, created by the manufacturer of the product. So we are very objective in our platform. Every single issuer's product is on it. They're all treated exactly the same, so we can really make sure we're matching the suitability for that end client. And 2, customization. I joke sometimes, but I've never seen 2 investment firms that work exactly the same way. They all have different product approvals, customization, compliance, parameters, whatever they be. So we do not have a square peg round hole model. It is very configurable for a given firm and advisor to match what their needs does. That has proven to be extremely valuable in the marketplace. We've seen client growth pretty rapid this year. We're adding new investment management firms and new broker dealers every day that they're already using the product set, but then using our technology is making it much more facilitated to expand that market for them.
I'm sure clients appreciate the customization. It feels like technology is so democratized these days, and it's not one size fits all, so I would imagine that's a key feature for them.
It absolutely is. I mean, in the U.S. market, and from a size standpoint, the U.S. market is about $65–70 billion in structured products. But if you look at Europe, is well over 300, Asia's over 400. Our market should be much larger, but I think we've reached some capacity because it's been a very manual process. So being able to match a given firm who's already selling them and link into their processes and their approval processes and just make the process much more easy. When you look at Fintech, you do one of 2 things. You either increase efficiency or you increase sales. I think we actually do both. We actually can make it much more efficient and actually make it easier for the advisor to use these products in clients' portfolios.
All right, Tim, thanks so much for joining us at Market Site.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.